Welcome back, gold followers. This is our weekly gold report, and my name is Angelo Zitis, and we start with our title for this week, which is Has Risk Really Been Removed? Our first point is US declares truce with China. Now, last week we referred to the G20 meeting. It was in Osaka last weekend, and President Donald Trump went in quite confident. He managed to declare a truce with China. He said no more tariffs for the time being, and that they will be talking in order to find a deal. A lot of analysts believe that China is negotiating, but at the same time, it's buying time while the situation remains stable. They could be waiting to see what is going to happen with the presidential elections in the US in a year or so. They could be waiting for the storm and then renegotiate to find a deal. All right. So even though this is a truce, the matter has not been removed completely off the table, and they still need to be talking in order to find a solution. All right. So our second point is Washington turned its attention towards Europe. Now this has taken place in the last 24 hours. This started as a dispute between Boeing and Airbus. Now, and even though the EU is set to deal with Boeing on its own, Washington stepped in and threatened with tariffs of approximately $4 billion on EU goods. For the time being, because Washington has threatened the EU, it could be hurting the relationship between the EU and the US. Gold has a highly sensitive nature towards risk and uncertainty and instantly reacts, and prices tend to surge on this kind of news. But it will be interesting to see, and I would like to advise people to be aware of this subject because it could move gold prices in the following days. Our third point is general weak financial indicators. Now, starting this week, on the 1st of the month, which was yesterday, we had news from the EU, which was mixed financial data, but leaned towards basically a weaker economy. The European economies remain rather below their potential. Then moving to Australia today, they performed a rate cut. They're trying to boost wage growth. They're trying to protect themselves from weaker demand coming from their trade partners like China. And from there on, we also had weak financial data from China yesterday with their Caixin PMI coming out below the reading of 50. So these are all news coming from different continents, and they could be emphasizing the idea of a global slowdown. And this is like energizing people to buy gold. It's attracting gold. Okay, and this could be the reason that gold has taken support on in the previous sessions. This is gold's 4-hour chart. We chose to show this chart because it indicates the levels more clear. Gold is currently trading between our R1 1400 level and our S1 1382 level. S1 has been tested many times in the previous sessions, as you can see, but this is turning out to be a very strong level. Now, a lot of analysts believe that the support that's been created on the fundamental news we just went through could send gold above the R1 1400, and it could even aim for the R2 1410 level. Even higher, the next probable stop is the R3 1425 level. Yet, we must say that since last week, gold is currently trading approximately 15 to 45 US dollars below the 6-year high it reached last week. So it's lost a lot of value, but we still want to see gold move lower. It could touch the S2 1360 level in order for us to lock on that the bearish momentum has really kicked in. If gold is to break below the 1382 level, we could see it aim for the 1360 level. Next could be the S3 1345 level. I would also like to point out the RSI indicator, which is currently between the 70 and 30 reading. Last week it was very near to the 70 reading. This is sending the message that a lot of buy positions have been closed and a lot of take profit has kicked in, and it will be interesting to see how gold will follow up in the next days. Now, we're not here to give you an insight as to what to do with gold. That's your job. My part is to give you the best possible view on what is happening at the moment, and I will let the rest for you. Make sure you read our full written report for more in-depth investigation. And if you've heard something in this report that you found useful, make sure you apply it to your trading. Thank you very much, and we'll catch you next week. Solid trading.